I'm Darius from Chelsea Financial Services, and I'm particularly delighted today to be joined by Adrian Frost, co-manager of the Artemis Income Fund. Adrian, how are you?
I'm very well, thank you. Thanks, Darius.
Good. Well, it's been a while since we've spoken, and clearly there's a lot gone on in the world with the pandemic. As an income manager, one of the consequences has been cuts in the dividend on the UK stock market. How has the fund's income payment held up in light of these big dividend falls across the market? And what's your outlook on dividends being reinstated going forward?
Yeah, sure. Look, I think we're in a position now where we can say that the dividends have held up relatively well. But the simple fact is they're down about 25% this year. They will be. And the market, I think, is probably in more in the 30s on that. In the early part of the crisis, it was very difficult to judge. And I think the way we thought about our dividends is 60% of the portfolio have maintained their dividends or grown them. And the others we put into two categories. Those that have really have their dividends knocked out for the next year or two. That's not to say that we shouldn't continue to hold them, but there is no prospect of a dividend near term. And those that, for various reasons of prudence or regulatory guidance, really suspended or deferred the dividends. Now, quite a few of those have come back. So in summary, dividends down 25% this year, and actually will start to grow next year. So we think that the net of this crisis will be a fall in the dividends of 15 to 20% from whence they'll start to grow again. And finally, let's not forget, at the same time, risk-free rates have fallen as well. So the spread of the fund's yield over bonds has remained relatively constant. So to give it some perspective.
Well, it's quite important to remember that, isn't it? And cash is currently zero and potentially heading negative. So
yes,
even dividend cuts or funds with dividend cuts still can look relatively attractive. Maybe we can just talk a little bit about performance. Performance has been strong since the bottom of market in March. What in the fund has allowed that strong relative performance?
Well, I think in general it's the realization that, from what was quite frankly for all concerned, a fairly chaotic sort of 6 to 8 weeks where companies were struggling to assess the implications of what was going on for their staff, P&L, shareholders, and the like. Out of this, it's like a picture gradually coming into focus. So let's take something which has been a long-standing and leading performer of the fund, which is 3i. In the early stages of the crisis, that was branded as private equity and likely to be troubled. Well, the very fact that 45% of 3i's value is in a Europe-wide discount store farm format called Action, which is now trading its socks off as a result of these circumstances, but actually probably is undergoing a nice structural tailwind. Is not something which we think is here today, gone tomorrow. We think it's much more enduring. So it's things like that, the realization that, it's the sorting out process on the markets. So it's things such as that, Direct Line and Phoenix, which amongst the insurers have been, reinstated or sustained their payments. Things like IG Group, which benefits from volatility in markets. And then latterly, we've long believed about the value of William Hill's position in the US gaming market. And you would have seen that's actually been subject to a bid approach. So taking all those things together, that accounts for a particularly strong 3 months, certainly relative to the market.
And just looking through your portfolio, I notice you still have a little in oil and gas, which is sort of a historic income sector. Which stock do you have there and why? And maybe give us just a little thought on the sector, because sort of the decarbonisation trend, I think, is well now known and well underway.
Yeah, so 15 months ago, we sat down and I wrote a paper for the team about really the confluence of what I call it conscience meets cash flows. which was that increasingly society and its options would start to impact oil companies' cash flows, and they would seek to divert cash flows into renewables with lower returns, etc., etc. The net of that was we cut our oil rating by 60%. Why didn't we sell it all? Well, because we expected companies to make strides to transition from being a traditional oil company to being a sort of more of a rounded energy company.
Yeah.
And so we just didn't know how the market responded to that. As it happens, the market hasn't responded particularly well, but let's give it time. We've got about 2.5-3% left in the sector. It's predominantly BP with a little bit of Shell. And I think long term, BP, we think, has made the greatest strides and stands the best chance of convincing investors that it can successfully navigate that long-term transition.
Now, whilst the pandemic has taken most of the headlines in 2020, Brexit is back on, if not the front pages, the second pages of the agenda. How do you view the UK stock market with the Brexit deadline coming, and obviously more local lockdowns potentially leading to something more stringent in respect of a second lockdown? Is there anything you can do to position for this, or do you think this throws up great opportunity for you?
Short answer is, look, with both of those issues, repositioning a portfolio is not a cheap thing to do. And bear in mind, our average holding period is 6 years. So it's not something you do lightly. And in both those instances, knowing the future path from here, I wouldn't say it's a 50-50, but the degree of certainty you'll have of actually getting that outcome right and moving the portfolio around, it's just a far less certain thing to act upon than when we actually look at the sort of 3, 5, 10-year fundamentals of a company that we like. Yeah. And really that's the point. A lot of our portfolio, we move the portfolio around if we think there are events there which are normally micro rather than macro, which will enhance or destabilize that long-term outlook for cash flows. And I don't want to make light of these issues, but thus far, neither of those issues are impinging terribly much on that very long-term outlook. Brexit in particular, we struggle to see, particularly after 3 years or 4 years of lagging all other world markets. We sense, and as witnessed by recent events, that there will be an M&A fest once again in the UK market for those companies that have strong and particularly international franchises. We have made a couple of additions using the volatility, Next and Burberry, but in both cases it's using the price action caused by these events rather than any particular influence of these events, because long term we think both of those companies have strong cash flows and stories to tell.
Great. And I'd just like to talk to you a little bit about the team, your fellow co-managers, Nick and Andy. I know Nick's been with you for several years, but Andy's been on the team a little bit more recently. Maybe talk to us a little bit about the dynamic, about how the three of you work, notwithstanding the working from home environment, but what it is that Nick and Andy bring to the team, and how that's benefited the fund.
Yeah, so Nick and I worked together for about 8 years now, and Andy's in his third year. And my goodness me, I struggle to understand how somebody doing this solo could cope, not necessarily through the crisis, the recent events that we have, but also given the structural shifts that are going on in industries, companies, sectors, call it what you like. So, I think people sometimes think that I'm holding the reins of the team and they are ancillary to that. It's quite the reverse. All three of us are holding the reins with different skills which blend together and different perspectives. And really that's what makes it work. And there are times when one or other of us will pull harder on the reins than the other. But it's a very grown-up discussion. But, we lob little sort of challenges to one another on email or directly, and that's worked pretty well during the crisis. But having said that, it was nice for us to be able to meet up, through July and August to have some face-to-face conversations as well. But I think there's huge strength and depth from having a team, and boy, oh boy, I'm really grateful to have the colleagues I've had, over the long term, but particularly in the short term.
Thanks very much, Adrian. That's really useful information on the fund, UK market, prospect for dividends, and finally a little bit about your working dynamic with Nick and Andy, as I know that they're a big part of what goes in, and more importantly, what comes out of the Artemis Income Fund.
Yeah.
For more information on the Artemis Income Fund, please visit chelseafs.co.uk.